Welcome, folks, to the Tech Stocks Daily podcast, where we dive into the latest movements and trends shaping the tech stock market. Today, we're diving into Google's latest tech forward leap, especially for our iPhone-toting friends out there. Google, known for its wide-ranging internet dominance, has just rolled a surprise your way, beefing up the security game for iPhone users via its Chrome browser. The catch? Well, let's unravel that. Despite Apple and Google going head-to-head on many fronts, it's heartwarming to see them find common ground in the crucial arena of user data protection. Recall instances when these tech titans have previously collaborated, like when Apple pointed out significant Chrome vulnerabilities. Riding on this collaborative spirit, Google is now bolstering Chrome browser security for iOS users, specifically through an update to its password checkup feature. Password checkup has been a guardian angel, flagging compromised passwords floating around the dark web's insidious corners. Now, Google introduces two newer guardians, alerts for weak and reused passwords. These updates endeavor to weave a tighter security net, catching vulnerabilities before they escalate into threats. Here's how it functions. Password checkup springs into action when Chrome detects problematic passwords during your web rendezvous. You're not left to stumble upon dangers unannounced. Instead, Google has crafted a proactive ally in Chrome's settings under the safety check option. Beyond detecting, this tool educates, guiding users through Chrome to stay ahead of potential security breaches. Google doesn't stop at password policing. It amps up its safe browsing capabilities, promising real-time URL protection to swat phishing attempts more effectively. This enhancement aims to thwart an additional 25% of phishing exploits, showcasing Google's commitment to evolving its security features in tandem with the sophistication of online threats. For those knee-deep in the Google ecosystem, navigating the web on an iPhone using Chrome has never been safer. This move might make one wonder about the synergy between carrying an iPhone and leaning heavily on Google's suite of products. Nonetheless, Google's recent update is a testament to its dedication to user security across platforms, offering solid reasons to consider Chrome for your iPhone browsing needs. Aside from enhancing individual security, Google's recent endeavors also shine through its reward system for spotting vulnerabilities across its products. In 2023 alone, the tech giant splurged $10 million in bug bounty rewards across 632 researchers globally. These efforts include ramping up the maximum reward for critical Android vulnerabilities and reinforcing the defenses of products sprawling across Android, Chrome, Wear OS, and more. As these updates roll out, whether you cling to Safari or pivot to Chrome on your iPhone, Google's latest foray into enhanced security and interactivity underscores its relentless drive to safeguard its user base against the ever-evolving cyber threats landscape. Oracle made headlines today by broadening its partnership with Microsoft, introducing new AI capabilities and launching Oracle Cloud EPM for sustainability. Starting with its expanded collaboration with Microsoft, Oracle is ramping up to meet the soaring demand for Oracle Database at Azure by extending its operations to 5 additional regions, amping up its global footprint to a total of 15 regions. This strategic move aims at enabling customers, especially in Europe, to utilize Oracle database services locally for the first time through OCI hardware in Azure data centers. In a pivotal advancement within Oracle Fusion Cloud Enterprise Performance Management, Oracle introduced the Oracle Cloud EPM for sustainability. This innovation equips organizations to efficiently gauge and enhance the management of their sustainability efforts, a step towards addressing the environmental, social, and corporate governance criteria that are becoming increasingly central to business operations. It's a solution designed to tackle the tedious, error-prone process of consolidating environmental data across various organizational and external sources, enhancing reporting accuracy and compliance with emerging guidelines through advanced technologies like AI and machine learning. Oracle didn't stop there. It also unveiled new artificial intelligence capabilities within Oracle Fusion Data Intelligence, aimed at bolstering decision-making processes across its suite of cloud applications. This involves enriching its services with analytics beyond the daily transactional reports and predictive model training for sharper insights and outcomes in fields like finance, supply chain, HR, and customer service. Embedding advanced AI features directly into Fusion applications highlights Oracle's commitment to optimizing data-driven decision-making. Notably, the company unveiled Oracle Smart Operations, enhancing supply chain execution capabilities within Oracle Fusion Cloud Supply Chain and Manufacturing. This development underscores Oracle's drive to innovate across its portfolio, fostering improved business outcomes through state-of-the-art technology integrations. This series of announcements from Oracle reflects its vibrant trajectory in the tech sector, demonstrating its sustained thrust on innovation, strategic partnerships, and a keen emphasis on sustainability and AI, aligning with the evolving demands and values of its global customer base. Apple made headlines today for a variety of reasons that showcase both the innovative directions the company is exploring and the market dynamics it's navigating. First up, there's an intriguing insight into Warren Buffett's investment strategy regarding Apple. A user on Reddit's r/stocks constant15578 analyzed why Buffett remains steadfast with his Apple stock, despite the tech giant facing potential regulatory challenges in the EU, DOJ, and China. The reason? A hefty tax on capital gains, were he to sell his significant stake in Apple, which comprises over 80% of Berkshire's investment at current market prices. However, emerging concerns about Apple's ad strategies and regulatory pressures could call for innovative responses from the company to maintain investor confidence. In another exciting development, Apple has been granted a patent that could redefine the iPhone experience. This technology aims to incorporate displays and control functions on the edges of iPhones and iPads, potentially eliminating the need for physical buttons. This move towards more integrated and interactive device designs shows Apple's continuous push for enhancement in user experience. These controls, akin to the MacBook Pro's Touch Bar, could adapt based on usage context, providing a more immersive and functional design. On the financial front, Apple stock's journey has been a roller coaster. After a significant rise in 2023, the stock has seen a downturn in 2024, partly attributed to declining iPhone sales in China. However, Bank of America securities analyst Wamsi Mohan sees this dip as a buying opportunity, proposing a 31% upside potential to Apple's stock. His analysis is rooted in Apple's practices of adjusting older model prices to sustain demand and the trend of nudging customers towards higher value units. Despite the recent slowdown in China, Apple's diversified streams of revenue, particularly from its high-margin services sector and ongoing share repurchases, suggest the company remains on solid footing to deliver returns to investors. Today, Meta grabbed the headlines for several interconnected reasons, all revolving around the swirling debates and legislative actions concerning TikTok's future in the United States and what it means for Meta itself. A bill passed by the U.S. House of Representatives could force TikTok's parent company, ByteDance, to sell the platform or face a U.S. ban. This legislative move sets the stage for a potential shift in the social media landscape, presenting a significant opportunity for Meta, the parent company of Facebook and Instagram. The rationale behind the legislative push is rooted in concerns over data privacy and national security, with lawmakers questioning TikTok's ties to China. The bill now awaits Senate approval, which, if granted, would mark a decisive turn in U.S. policy against the popular app. Amid these developments, the focus has shifted towards Meta as a significant beneficiary should TikTok face restrictions or an outright ban. With over 150 million users in the US alone, TikTok's absence could lead social media users to flock towards alternatives, prominently Meta's offerings, Instagram, and Facebook. Interestingly, the potential benefit for Meta goes beyond user migration. The bill's passage revealed a curious intersection of policy and personal investment among lawmakers. According to Quiver Quant, which tracks trading activity by Congress members, a number of representatives holding Meta stock voted in favor of the TikTok divestiture bill. This raises questions about conflicts of interest and the role personal investments play in legislative outcomes. Gene Munster of Deepwater Asset Management echoed sentiments that the content and direction of these legislative actions signify a small amount of good news for Meta, aligning with former President Donald Trump's criticism of TikTok and implied preference for platforms like Instagram Reels. Trump, in his critique, emphasized the competitive edge Meta might gain, showcasing the intertwined nature of politics, business interests, and the tech landscape. The potential reshaping of the social media domain, prompted by legislative endeavors and geopolitical considerations, suggests significant implications for user behaviors, content creators, and the broader competitive dynamics among platforms. For Meta, the situation presents a strategic opportunity amidst an evolving digital environment, possibly altering its market position and impact on the global stage. And now, drumroll please. Let's dive into why MicroStrategy has been making headlines today. MicroStrategy Inc. saw its shares take a bit of a tumble, dropping 6.46% to $1,652, following a spectacular rally over the last month where shares soared more than 130%. What's the buzz about? The company announced a proposed $500 million offering of convertible senior notes due 2031 aimed at institutional buyers, with an option to purchase up to an additional $75 million. And what's this all for? You guessed it, more Bitcoin. MicroStrategy's roller coaster ride in the stock market is in part fueled by its aggressive Bitcoin buying spree. Between February 15 and 25, the company scooped up an additional 3,000 Bitcoins, pushing its total holdings to a staggering 205,000 Bitcoins, with an average purchase price of about $33,706 each. But it's not just about buying. Michael Saylor, the company's co-founder and executive chairman, has also been selling shares, albeit as part of a pre-planned trading strategy. It seems like MicroStrategy's fortunes are closely tied with Bitcoin's market performance. With Bitcoin prices taking a slight dip, down more than 1%, and trading around 71,790, it's no wonder that MSTR shares also saw a decline. Nonetheless, the company's bullish stance on Bitcoin has been a boon for its stock, which boasts a whopping 586.59% gain year-to-date, outstripping its historical averages significantly. MicroStrategy's Bitcoin strategy hasn't only been about highs. It's made life quite difficult for the short sellers who faced losses to the tune of $3.3 billion this year as the stock soared about 180%. And with every additional Bitcoin purchase, MicroStrategy continues to ride the wave of Bitcoin's market movements, which recently saw a boost from the influx of ETFs and anticipation around Bitcoin's halving event scheduled for April. Moreover, MicroStrategy's trading dynamics have caught the eyes of investors, particularly the whales who've shown significant interest in MSTR. A peek at the company's trading options reveals a divide between bullish and bearish sentiments among these deep-pocketed investors. This keen interest and the potential for big moves make MicroStrategy a stock to watch closely. So folks, what do you make of MicroStrategy's bold bet on Bitcoin? Is it a stroke of genius or a high-stakes gamble? Dive into the comments and let us know your thoughts. And don't forget, whether you're riding the Bitcoin wave or watching from the shore, staying informed is key. The overall market sentiment today, as gathered from the reports, displays a dynamic mix of innovation, strategic partnerships, and forward-looking investments across several major tech companies, conveying a generally positive and progressive outlook in the tech industry. Google has made significant strides in enhancing user security on its Chrome browser for iPhone users by introducing updates to its password checkup feature. The updates aim to bolster the safety net for users by alerting them about weak and reused passwords and enhancing real-time URL protection to thwart phishing attempts more effectively. Google's dedication to user security, demonstrated through a $10 million bug bounty reward program, underscores its commitment to evolving its security features in line with the sophistication of online threats. Oracle Source highlighted its sustained innovation with new AI capabilities, an expanded partnership with Microsoft, and the launch of Oracle Cloud EPM for sustainability. Key developments include Oracle's effort to meet the soaring demand for Oracle database services through Azure, addressing sustainability management with technological solutions, and embedding advanced AI capabilities into its cloud applications. These announcements reflect Oracle's vibrant trajectory in the tech sector by focusing on sustainability, strategic partnerships, and optimizing data-driven decisions. Apple demonstrated resilience amid regulatory challenges and market dynamics. An analysis of Warren Buffett's unwavering investment in Apple, despite potential regulatory headwinds, emphasizes the strategic value and solid footing of the company. Innovations like new patents for integrated displays and controls on device edges indicate a continuous push for user experience enhancement. Financial analyses suggest Apple remains on strong footing, emphasizing its diversified revenue streams and the high-margin services sector as reasons for investor confidence. Meta is potentially positioned to benefit from legislative actions concerning TikTok's future in the United States. The passing of a bill that could lead to TikTok's divestiture or ban creates a strategic opportunity for Meta to attract users towards its platforms, Instagram and Facebook. Moreover, the intersection of policy and personal investments among lawmakers voting in favor of the bill raises questions about conflicts of interest. This legislative environment suggests significant implications for Meta in terms of user behavior shifts and competitive dynamics. MicroStrategy's market sentiment reflects a mix of opportunities and challenges, largely tied to its Bitcoin investment strategy. Despite a recent tumble in its shares, MicroStrategy's aggressive purchasing of Bitcoin and its consequential market performance showcases a bold, high-stakes approach to leveraging cryptocurrency dynamics. Investor interest, particularly amongst whales, and the split between bullish and bearish sentiments highlight MicroStrategy as a key player to watch in the intersection of tech and cryptocurrency investment strategies. Overall, today's market sentiment is shaped by a blend of strategic technology advancements, legislative dynamics, and innovative investments, painting a picture of an industry that remains vibrant and forward-looking despite the challenges it faces. Let's talk about Meta, folks. Given today's news and the ongoing legislative actions concerning TikTok's future in the United States, I would lean towards a buy recommendation for Meta stock. Here's the breakdown of my reasoning, but remember, always do your own research before making any investment decisions. Why buy Meta? 1. Legislative tailwind. The legislative environment in the US could potentially lead to bans or divestiture of TikTok. This scenario opens up a substantial user base that could pivot towards Meta's platforms like Instagram and Facebook. Given TikTok's massive popularity, especially among younger demographics, this shift could significantly boost user engagement and time spent on Meta's platforms. 2. Strategic opportunity. Meta has been actively trying to counter TikTok's growth with features like Instagram Reels. A reduction in TikTok's market presence due to legislative actions provides an unmatched strategic opportunity for Meta to capture a larger share of the social media market and potentially increase its advertising revenue. 3. Potential for user behavior shift. The volatility surrounding TikTok might lead to a natural user behavior shift towards established platforms. Meta, with its robust ecosystem, stands to benefit from such changes, securing a more stable and engaged user base. The caveats. While the analysis leans towards buying Meta stock, investors should closely monitor how the situation around TikTok unfolds and how effectively Meta capitalizes on the opportunity. Additionally, regulatory pressures on Meta itself, along with its capacity to innovate and keep users engaged amidst growing competition, remain critical factors to consider. Conclusion. In light of the potential strategic gains for Meta from the TikTok headline, the initial assessment swings towards buying. However, the landscape of social media and tech investments is incredibly dynamic, with regulatory, competitive, and technological changes constantly reshaping the scene. Therefore, it's crucial to stay informed, consider diversifying your portfolio, and align investment decisions with your risk tolerance and financial goals. And there you have it, my take on Meta in today's tech landscape. Remember, whether it's the fast-moving world of tech stocks or the volatile crypto market, thorough research and a clear strategy are your best allies in navigating these waters. Happy investing. In conclusion, today's market activity was a vibrant showcase of strategic innovations, robust partnerships, and bold investment moves across the tech sector. With Google enhancing security features for iPhone users, Oracle expanding its footprint and AI capabilities, Apple navigating regulatory challenges with innovative patents and solid financial footing, and Meta possibly standing to gain from legislative actions against TikTok, the tech landscape continues to thrive on advancement and dynamic strategic positioning. Meanwhile, MicroStrategy's bold Bitcoin strategy adds an intriguing layer of complexity to the investment narrative within the tech industry. Today's developments highlight the importance of staying informed and agile in an ever-evolving market environment. Each news piece carries implications not just for the companies involved, but for investors, consumers, and the broader tech ecosystem. If you found today's summary insightful, don't forget to like, subscribe, and share this video with others who might find it helpful. Your support helps us keep you ahead of the curve in the fast-paced world of tech and finance. Be sure to return tomorrow for another roundup of the day's top tech news, where we'll continue to break down market trends, innovation highlights, and investment insights. Stay ahead, stay informed, and let's navigate the exciting world of tech together.